So let me just check. Can you hear us on the internet? Can anybody answer?
Yes, we can.
Okay, thank you very much.
I will start first. Good afternoon, everyone, and welcome. It is my pleasure to have an opportunity to address such a progressive, inspiring, and diverse community of mostly young professionals, but also experienced educators. I must say that as a Dean of School of Computing, or better known as RAF in Serbian, I'm proud that we are hosting this wonderful and really unique event, Festival of Computational Finance. Having this program, Mastery in Computational Finance, as an integral part of our education system, brought some new quality, visibility, and recognition for our faculty, as well as valuable connections to the world of economics and finance. Since this program has started first as a short cycle program and then as a master program, we have started signing contracts of cooperation with companies and institutions, banks, that we, as mostly computer science and computer engineering institution, have never dreamt of having as a partners of RAF. This is our only program in English. So it represents a unique opportunity for us to attract international students and make the School of Computing visible to the broader academic community. On the other hand, I think that being a RAF also provides some important benefits to this program, and that it fits here very well. I think that RAF helps to emphasize the computational part of the program and making it recognized as part of the well-established image that RAF has in the IT world. Also, I feel that the experience that we as an institution have in educating young IT professionals contributed a lot to this program. As for education programs in this modern world, it seems that multidisciplinarity has become a natural path for developing study programs. I personally have seen several attempts to create quality programs that connect several fields. That is mostly, especially when we speak about data science, which is multidisciplinary by its nature, mostly applied computer science and mathematics to some domain. Bioinformatics is another example of that. But it has been proven several times that it is very hard to create and especially realize quality programs of this type. We usually have a situation where mathematicians teach mathematics, computer scientists teach programming, but we need some domain experts to make sense of the data and apply all of the principles to exploring them. In my opinion, this program, Master in Computational Finance, is probably the only program of this kind that is successful, because here we have a central figure, which is Branko, with his expertise and enthusiasm that made him able to really have a big picture and to fit all the pieces together. Through our wonderful cooperation these last couple of years, I realized that Branko and I share similar views on education and connections to the professional world. What is also interesting is that Branko, with his enthusiasm, brought us some new perspectives, especially when it comes to the field of marketing and creating presence in the professional world. Because naturally, we as a computer scientists, mathematicians, and software engineers are mostly indifferent to those things and pay little or no attention to them. Branko showed us the importance of being present in professional social networks, media, professional events, having better internet presence, which we, with so far modest success, try to incorporate. At the end, I have to emphasize once more how exciting and honored I am to be here today with you. And with all the things said, I really expect the bright future for RAF and this program being a part of it. I hope that we will continue to set really high standards in education with exciting innovations, creativity, constant improvements, and in that way attract talented and inspiring young people who make our job as professors very exciting and fun. Thank you all for coming, and I wish you all a wonderful time here at the Festival of Computational Finance.
So, Bojana, after what you said, maybe I should say nothing else. But let me ask you, so could you please now give the diplomas if everybody who is, or at least we have 3 people so far that finished, and one of them I think couldn't come, but maybe Dad can get the diploma for him. And you give these diplomas the people that actually completed the program fully. Master in computational finance. Yes. So there are many people that completed the coursework, and now they need to write also the thesis, and so, okay, and defend. The first student is next student is Nikola Novaković. And the third and last one, Vasilije Nikačević. Okay, so first of all, I would like to start outside of the script, since I'm looking at Steva. And first of all, thank you so much, Bojana, because your words was extremely kind, and I totally share your view that we are collaborating in a very good way, and not only with you, but with everybody at RAF. It's really a unique collection of wonderful people. They're professional and good people, and they are really putting a lot of effort. Not an easy task. We have a lot of students. Dragana is doing a fantastic job. But I have to say, Steva, who took this diploma, he actually did much more for this program than just diploma, because de facto we created the program together, he and I. He was the dean at the beginning, and he was the one who encouraged me to come to RAF and make this program. So thank you, Steva. So now, because we have some people who need to, one of the important person who needs to say something, I'm going to make sure before she leaves that she can say, because she has another event to chair. But I'm very happy to be able to talk to you here, and if only this would actually move, these slides. No, they don't move. Why do they not move?
Mišem kliknite, probajte mišem sam.
Ali kako? Našta? Ovo je možda ovako?
Može.
Okay, fine. So let me start by observation. So this computational finance, for many people who are not into that field, or they think they are not into that field, sometimes they are, but they don't know. Just like, Molière said, well, many people don't know, they speak in prose, So the same way, this computational finance is all around us, actually. So if you do finance, more than 80% of all the trades are algorithmic trades, where machines are doing the trading. Close to 90 now. Machine learning and artificial intelligence, well, it's kind of impacting everything, but in finance, they're always ahead of the traditional industries because they have a lot of money and they want to make more money. And a good way to make more money is to put together technology with finance. And then there is blockchain technologies, which gave rise to fintech and decentralized finance. And they are changing completely what we mean by finance. So there are traditional banks, which we have some representatives, people working in the traditional banks. But increasingly, it is only due to the will of the regulators that fintechs don't have bigger impact. So basically, traditional banks could do much better if they incorporate more and more of some of the ideas of the fintech and computational finance, and many of them, especially the biggest ones, do. So at the end of the session today, there will be guys who are working and who will not be taped, but they will be seen, who are working in these leading foreign institutions, and they are going to talk about their experiences, what happens in practice with computational finance. And what they told me is that pretty much about 2/3 of all the jobs in finance are now related to programming one way or another. So it's really big. But there is something really shocking to me when I figured out how much technology crept into McKinsey and firms like that. Just to give you an idea, if you don't know much about McKinsey, this is one of those very old-fashioned, in the past, very old-fashioned consulting firms, one of the most famous ones, where most of the job was done by people getting together in the good old boys networks, smoking cigars in some clubs, making deals. So you hire my son for the internship, I get you a job for McKinsey, things like that. Or I become a McKinsey partner, then I become the CEO of a company that was my client, and this is the way how money is made with that. Now, 70% of all the revenues of McKinsey comes from machine learning applications. Now, I worked there, so I actually know a little bit about it. I worked there for 2 years in the 90s, and it is quite shocking. So McKinsey is now really one of the better places to do and learn machine learning. Who would think? Because when we were there making the PowerPoint presentation, it had to be sent to India. They wouldn't trust us to make PowerPoint presentations. So, and finally, well, all of this is actually done through the methods of computational finance. So, okay, this cannot be seen very well, but what it says here, it says computer science in this blue thing, and it says finance, quantitative methods, and data science. So basically, and computational finance is in the intersection of that. So basically, people that do computational finance, they do finance. Okay, so this is a finance thing. But they are using data, but because they are using data, they need to learn to program. And because they used to learn to program, and also they need to know what to code, and so they need quantitative methods, they need to know the models. So you need to kind of learn all of this. Plus, there is also blockchain, and this is now creeping up. And I didn't have enough of those circles to put there. It would be too hard to see. And so the question is, well, okay, it looks like quite complicated, but can I make money learning about this? You bet. So let me give you an example, a very simple example. Hopefully it will inspire you to learn more about finance if you don't know anything. So suppose today is June 3rd, so obviously I made it on June 3rd. So these are real numbers. So the Microsoft stock shares, $413.52. And say I'm sitting and I have this good feeling because I know maybe something, or maybe I think I do, that by June 28, there should be some good news coming out to Microsoft, and so I'm expecting the stock to rise. So I can bet on that, and one way to bet is to buy the stock. Another way to bet is to buy something called the call options, and there are many, many call options for any stock. So for example, for Microsoft, there is more than 4,000 call options and about 4,000 put options in any given day. What is a call option? The call option is the right to buy Microsoft stock, but not right away, but with some delay. In this case, we can buy the call option that gives us the right to buy on June 28th. And it gives us the right to buy with a certain prefixed price. So basically, I fix the price now, at which I would, if I decide to use the option, at which I can buy. So I can buy for $415, which is just slightly above the price today. And this option is selling. It is like an insurance contract, if you will, that this is the price you would pay. It's selling for $850. So basically, now I can compare two strategies. Of course, you can come up with many more different strategies with options, but let's say you just compare two. So you can buy a stock, one stock, and you pay $413.52, or equivalently the same money, You can buy 48 calls. Each of them costs $8.50. So it's about the same cost. And so then the issue is the following. So what happens if the stock price on June 28th went to $4.30? So it increased by $16. It's not an impossible increase. It's about 3-point-something%. Totally feasible if some good events happen. And, well, you would make exactly, if you buy stock, you would make those $16. But if you buy call options, how much would you make? You would make this much. So first of all, for each call option, you can buy the stock at that time on the 28th of June. You can buy for 415. You can sell it right away in the market for 430 because this is now the market price on the market. So you are locking in $15 profit. But that costs you this, right? That costs you $8.50. Therefore, you actually make from each of them $6.50. And because you bought 48 of them, you make $312. So imagine you only invested 413, and you ended up with 312 in profits. That's insane. But then it's only for 3 weeks of investments. And then, well, what happened if it actually got even slightly higher than that? Well, as you can see, the investment in a stock is linear because it will just increase by that much. But options are non-linear, and therefore, you can almost double. Just by moving another $5, you can almost double the profits. Well, that's really crazy. So Professor Miško, sitting on the left, he has been doing this for much more sophisticated stuff for a long time. And he will say later on about that. And so, as you can see, it looks phenomenal. But, of course, there is a catch. The catch is what happens if the stock price goes to 414. Well, in just buying the stock, you would still make a little bit of money. You would make 50 cents. But with the options, because you see, now you have the right to buy for 415, but on the market, you can only sell it for 414. You would not do that because you would lose money. So you just leave this option to expire. You don't need to exercise it. And therefore, you bought something for $413 on June 3rd, and it's completely worthless. So you can either make a lot of money if your gamble was okay, or else you can lose a lot of money. And of course, you can come up with different strategies where it is much more reasonable distribution of outcomes. But basically, these guys are interesting, and you can, this is, if you like to bet, this is one hell of a lot to bet. Okay, well, is there, you're screen sharing, but I cannot, so can you help?
Na chatu neko.
Da, možete mi
ne znam da li je neko pitanje.
Okay. Excellent example. Okay, Microsoft is the largest company by market capitalization, and the second is NVIDIA. Better to play your investment views through options. Okay, Drago said that. Okay. Thank you, Drago. Okay, so now I wanted to give you, because you see I promised in that little flyer that I sent that I'm not just going to sell you the program because I actually want to tell you a little bit about the field. And how did we get to have that field at all? And that's actually important. You know, this way you can understand what we are doing and why. So these two guys played a huge role. But OK, let's go through this. So it started, from my point of view, in any serious way, with the mean variance optimization, which is basically the idea that you can trade off risk and the expected returns in your portfolio, and that you can find the optimal way in which you can do that. And this kind of problem is not very complicated mathematically in its simplest setup. It was done by Harry Markovic in 1952. He was working for Rand Corporation at the time and a PhD at University of Chicago. But even that very, you know, it's quadratic optimization, not a hard problem mathematically, can be done in Excel solver. This is something that was shocking the community of the university professors in finance because they have never seen any operations in mathematics before that, which was not multiply, divide, sum, and subtract. And that's for sure. This is according to the Nobel laureate who was the thesis advisor of this guy. And so they failed him. They failed him, but then after some pressure, they passed him because they told him, okay, this is a pure mathematics, there is no economics there, and then he got the Nobel Prize for that. Okay, the other guy who got the Nobel Prize was Bill Sharp, who figured out another way. So if you have these portfolios, first of all, from the ideas of mean variance optimization came the idea that you want to diversify your portfolio. You don't want to put all your money in the same assets, in the same stock. And therefore, or you don't want to put all your eggs in the same basket, so to speak. And then, if you do this well-diversified portfolio, this model of capital asset pricing model, or CAPM, they figured out in a clever way how you can have a very simple way to price assets, to price companies, to price stocks, where basically you would need to, in calculating the expected return, you have the risk-free rate, which is the rate that government charges, and then you have a premium, but only the premium related to the stuff you cannot diversify away. So the market is not going to reward you if you're stupid, if you don't do things optimally. So the market kind of pushes you to think optimally, okay? And then these guys came. So they figured out in the 1970s, Black and Scholes, they figured out the way to price options. Now these options are like a nuclear instrument. I mean, obviously these other things are cool, but the options are really, as you can see, you can lose a lot of money. And so they derived that using, basically utilizing some partial differential equation, which is actually turns out to be completely equivalent to something called the heat equation. Now the heat equation describes how the temperature of a body changes over time. And so this was an equation that was studied intensively by a guy named Fourier. And that was 200 years ago. And he figured out all kinds of ways to solve the problem, and many people after him. And so they knew, once they mapped the problem into something that people know how to solve, they knew how to solve it. They obtained a fantastic, simple solution called the Black-Scholes formula for pricing options. And so then, the cool thing is, with pricing options in this simple way, anybody could do it. So you can put this formula, which has only two terms. You can put it in Excel, and basically all your computations can be done in Excel, sometimes maybe using Visual Basics. This is how it was. Now, there was a price. Why they were able to get such a simple thing? Because they assumed a lot of things. They assumed that the assets have normally distributed returns, which they do not really. They have constant interest rates and volatility. And also there is unlimited liquidity, and the trading is always there. You can always buy and sell. But then there was some group of professors from Berkeley who were actually teaching me at my PhD program in finance. So basically, Ken Leland and Mark Rubinstein, they created a portfolio insurance. So this was a cool product. Basically what they said, okay, if I'm an investment fund, I can buy an insurance, and so if my portfolio goes down, let's say 10% or 15%, whatever I agree, automatically the money goes into the riskless asset, and so basically I'm not going to lose any more. And if not, then I can get all the surplus. Okay, so that was a very cool strategy involving options, except something happened. And this happened. So basically in one day, 25% drop in the market happened. And it was driven by those two guys, my professors. So that was called Black Monday, October 1987. So basically, the machine said, you need to sell, you need to sell, you need to sell, but nobody wants to buy because you can see that things are falling. And obviously, the models don't work when nobody wants to be on the other side. So then, they had to start developing more realistic models so that the prices that were using just the Black-Scholes unadjusted were not working anymore. And so no more closed-form solutions, but that requires some numerical methods, or Monte Carlo, or whatever. And this is where various quants entered. So when I got my first PhD, which was in physics, I was one of the few that didn't go to Wall Street. Almost everybody went to Wall Street. Nobody went to physics. And basically, I went to McKinsey, which is even much less technical than Wall Street was then. But it just happened because that was a job I got. I didn't have a lot of choices at that time. And so then basically the world financial crisis hit. And in that crisis, everything, so this is the black swan. So they say black swan happens only once in a lifetime, but it happened several times, as you can see, every few years. So this basically, the world financial crisis shook the foundations of the system. And the basic modeling is still important, but now they started working on machine learning and started using fintech and do all kinds of stuff. So you can see basically from one crisis, from one catastrophe to the next, they are trying to improve the modeling. Improving the modeling requires more smart computations and more severe calculation requirements and so on, more programming. These days, they are saying, okay, well, AI is good, gives us good predictions. However, we want to know, especially regulators, why, and also investors, why are we actually making these predictions? What is the cause? And so these old formulas were very intuitive. The black box AI is not, so they have this explainable AI, which is now all the rage. And also now the generative AI is also entering the scene. And so also blockchain technology is being developed, and in fact, we have somebody who is working on that. And basically, importantly, programming on all levels and the efficient work with data is needed throughout the organization. And we will talk about people who actually do things, and they'll let you know how it is. So Python is now used pretty much throughout the banking industry. It became like a new English. And I don't want to go there. Okay. And so for those who are technically more inclined, well, in banks now, they do a lot of GPU programming and with PyTorch and TensorFlows. And the big tech is entering finance. So Google is developing, and also Microsoft is developing quantitative and computational finance platforms and all that. And interestingly, I was shocked to hear in Raiffeisen Bank, believe it or not, they are working with quantum computers. They are experimenting. But yeah, I was watching there was some very clever Croatian guy who works there, and Central of Raiffeisen in Vienna. And they were trying to solve very simple problems for now using quantum computers, so just to see how it works. But it's kind of impressive that they would actually do that. So the bottom line is, before I go on, I just want to tell you one thing. So but you already said it. You took it from me, or I can take it from you back. So basically, we are teaching people these separate things. So you have these engineers that are smart engineers, but know nothing about the world outside of that. And then they need to work with other people. And if they don't know what these other people are thinking or how they are thinking, then it's hard to do. The same with these other people. Well, they want the programmers to do something, but they have no idea what they can realistically do. And so what we are trying to do is create something like a Google Translate, at least for the field of finance, where people can understand each other, all these different types of people. And that's actually quite valuable. And this is our program, basically, in a sense. This is computer science, finance, quantitative methods, and data science. And now I would like to, before I go on, I would like to ask Emilia to say something about her experience, because she needs to go to chair another session. She is the chairman of the Serbian Blockchain Association, has a meeting. So Emilia, please take over and say something.
Thank you, Branko.
Yeah.
Would you like me to?
Yeah. Okay. Okay. So Emilia was one of our participants. She was supposed to speak in a panel, but she will not be here, so I wanted her to say something.
Hear me now? Working, yeah. Thank you, Branko, so much for this improvisation. It was very, very cool, as usually we did it in the faculty. Hello, everybody. My name is Emilia Vuković. I'm the president of Serbian Blockchain Initiative, and I'm also leading the first ever supercluster for Web3 and blockchain technologies. And yes, I have a public appearance with USAID in 25 minutes, but it was very, very important for me to be here. So I think that says it enough. To be quite honest with you, it was a challenge for me to go to this course. When I was advised by Ivan Bjelajac, who's one of the Web3 pioneers of Serbia, and he's actually a student of Dragan Pleskunic, who's a cyber god of Serbia, and so Dragan's daughter finished the master class. So we are all connected in this great community of researchers and scientists. By education, I'm Doctor of Medicine. I did my first master thesis in healthcare management and then the second one in computational finance, and I'm doing my PhD on the topic of usage of the blockchain in the healthcare management. And I'm mostly working abroad. I have a company in Singapore, and I don't know what to tell you. From one side, the education that we got here was truly amazing, but to be honest with you, the biggest value I gain are the people. So the community that I met here, all of the professionals, that's something that you cannot find anywhere. And I'm extremely proud that we did this together. Those are my colleagues right there. And those are the friendships that are built for life now. Because when I went for an informal discussion with Branko for the master class, Ivan told me, oh, it's a really good idea. You're a nerd. You should do it. It's going to be useful for your career. I had no idea how much it really did. Mark, also our friends from the class, he's now in the company of my friend. Nicola and me are having different projects. So we're all collaborating together. And that's a really big value for us. And just if you're not sure, like, can you do this master's or it's going to be too hard for you? When I went to that meeting with Branko, I was not alone. I was heavily pregnant. I was like 6 months. I was really big, guys. And Branko asked me, like, are you sure that was 2 years ago? And I was like, yeah, we could do it. And I would not, honestly, I would not do it without Nicola. Firstly, because his patience to explain something like this to a doctor who's in the blockchain and working with AI, it was a struggle. And then I need to say, I'm very honored and I'm really happy that I met Branko. Not because he has 2 PhDs and he's one of the smartest people I ever met, because he's still a really, really good human being.
Not in this program.
Just physics in Berkeley, yes. But honestly, yeah, that was something that was truly inspirational for me, maybe above everything else, that somebody who is that smart, who traveled the world, who's a global player, is still a humble and normal human being. Trust me, that's the rarest of it is. So thank you so much once again for the opportunity to share my experience.
So that you're not late. Okay. So first of all, basically getting Emilia in the program and getting her to actually work hard, which was also Nicola and the rest of the group was very instrumental to that. I really was impressed that somebody can do these things. And so then I don't really want to hear any excuse from anybody else, some guy who is not married, maybe doesn't have much obligations other than that, maybe doesn't even work. And then if he says, well, I was too busy, this thing, that night on Splavovi, that was really hard. We couldn't. Okay. So then that's not too impressive. Okay. So let me say a few words about the program. So obviously one can say a lot, but first of all, it's a program in English. Secondly, it starts at the beginning of December, semi-officially. It's basically there is a boot camp, which starts in December until early February. And the boot camp, Alexander is going to talk about that. We have 2 parts of the boot camp, in Python and in R. So in case that Alexander doesn't talk about the R part, I just wanted to say the R part of the boot camp is R and probability. It is taught by my very close friend, Dr. Martin Zumer. He's the head of research of the Austrian Central Bank, and he donates the course for our program because he really likes our program, and I guess we are good friends. So, and Martin is really a fantastic human being. So he created an electronic textbook for the purpose. And he teaches basically foundations of R and the probability, but from the finance perspective, so you learn both banking and finance, and you learn about programming. Okay, and then there are 2 semesters from February to July and from September to December. So there are 2 versions of the program, and why there are 2 versions? Because some people have trouble fitting into the standard master because, for example, they had 3-year education. It's not their fault. Most people in Europe have 3-year education before they go to master. But the geniuses in Serbia come up with 4. So be different. And of course, now we cannot have most people coming from Europe unless they finish already a master, which we have actually. Katarina is one of those people who finished 1 master and then came for our. Anyway, so because of that, we require 4-year completed undergraduate education or more. The highest level of education we accepted somebody was somebody with a PhD from in electrical engineering and telecommunication. He's from Macedonia, and he was a full professor in Russia. And then at some point, he did it for a while, and then he said, "Okay, well, this is too much." But the point is, because he was busy doing other things. Anyway, so we have a few people with a master degree already in different fields, but of course, most of the people are the ones who are doing the master for the first time. We don't care. Have a master or not, we just need to be able to formally admit you. And if we cannot formally admit you into the master, we can always admit you into the, if we like you, into the short cycle. And that's basically exact same courses, except you don't need to write the master thesis, but you don't get the master degree, you get the certificate. So that's basically the difference. So we have some really great people who never completed the master for whatever reason because of that. So, as I mentioned before, the first line here, there is this equation, finance plus programming is write your own ticket. So, knowing programming, yeah, you can make some money. Knowing finance without knowing programming, yeah, maybe sometimes, not less and less. Knowing both really well, there are not that many people yet in this part of the world, and more, of course, in the most developed parts. And this is basically really very powerful. You know, you can make a lot of money. Not only fintech, but all kinds of, just even in a traditional banking, they are just needed people that know both. Now, interestingly, as Emilia mentioned, people come that are highly motivated, and they don't come just from Serbia. We have actually also from the region, from Croatia, from Montenegro, from Macedonia, from Bosnia. But we also have this year, for example, a guy from China who is living in France. We had last year the guy from Barcelona. We had people from America. There is our girl who works in Banco Santander in New York. She wanted to go to study these things. She saw the price, how much American schools charge, and then she came to us. So on. So basically, great professional network. I think I can never say it so well as Emilia did. And so what you do, you kind of develop a common set of skills because we put you in groups to work together, people who are of different. So we have economists, programmers, mathematicians, physicists, engineers, but also medical doctor, a dentist this year. So we like this medical stuff, right? There was a lawyer. There was a girl, very good student, who graduated from the philology department, Albanian language. When I asked her, how come you studied Albanian, she said, because nobody else does. And I do everything to the contrary of however everybody else does. I said, you are admitted. Okay, and she was quite good. Of course, it helped that she finished mathematics gymnasium before that. And then basically you learn to recognize the business of financial problem and develop some solutions using Python or R. And sometimes Solidity and some other. So now, Alexander, can you take over and say a few words about our educational process, because we have a lot of innovations there. And when I say innovations, I mean in Europe, this is something that we do first.
Okay. Good everybody. My name is Aleksandar Damjanovic. I'm teaching assistant here at MCF program, where I'm teaching a couple of courses, among which is the bootcamp, which is our innovation. It is like a preparatory course, which prepares you nicely for the things that's yet to come in the first semester. It starts in December and ends in February, just before the start of the mandatory part of the course with this grading courses of in the program. the idea of this bootcamp is to prepare you in two ways. The first one is like to get the elementary knowledge necessary for all of you to participate in first semester and these mandatory courses that I mentioned. Basically, the idea is that this is the multidisciplinary program. We here study combination of both finance, mathematics, statistics, and programming or informatics science. So we usually get the people from different fields which are proficient in each of them separately. For example, some of them are proficient just in programming, some of them are proficient just in finance, but not in all of them together. So they lack some elementary knowledge from these other fields in order for them to be able to participate and follow the first semester. So during this part of the course, we are teaching them some elementary stuff from all of these fields, and after that they are all brought to the same base, so they are able to follow all of the stuff that they haven't learned during their previous schooling. Our main focus during this period is on programming, because 2/3 of our students are basically non-programmers. So the main goal is for you to learn how to program in both Python and R. But during these lessons of learning how to program, you're learning about programming through mathematical, statistical, and financial example. So we are also covering financial stuff, mathematical stuff, etc., etc. So people who are not programmers also learn about these topics from our course. And the course is basically divided into two separate parts. One covers mathematics, finance, and Python, while the other one covers, as Professor mentioned, probability, statistics, and R. This second part is covered by solely Martin Zomer, while the first part is covered by Professor Branko, my colleague Vladislav Radak, who is also going to be a speaker, and myself. The second important thing which bootcamp prepare our students is for organization of MCF and teamwork. Another innovation of our program is that all pre-exam activities are done within a group as a team, not individually. So our students complete homeworks, pre-exam projects, midterm projects as a team, not individually. So each of them get to solve some task, etc., etc. So they have to learn how to work with other people, which is something that is not usually learned during the traditional schooling here in Serbia. So being able to communicate with other people, to organize yourself, to fit in and fine-tune the group before the program itself starts is a nice opportunity for you to prepare yourself and meet up people, find some symbiotic relation, because as Professor mentioned, this group are designed to have people from different fields in them. So if you are, for example, programmer, you can help people who are not programmers during that period to learn some stuff quickly or clarify something which we haven't clarified clearly enough to you. But you can also learn from them, because as a programmer, you probably don't know much about finance, and they can help you a lot to cover some financial stuff or mathematical stuff used in finance and something like that. So
okay, wonderful. Thank you, Alexander. So let me just mention important things, namely that the lectures are all done in a hybrid mode, just like oftentimes at RAF. So basically, they are going to be in classroom or Zoom, or some of the lectures for those professors who are actually living abroad, they're only done by Zoom. And our goal was to bring the best lecturers, and of course that involved bringing our diaspora to ask them to do stuff. And so they are basically mostly very busy, so they are teaching online, but they are really, really hard working with students and helping and supervising thesis and everything. The classes are free up to 3 times per week, normally Monday, Wednesday, and Friday in the first semester, from 6 p.m. until roughly 9 p.m. So, okay, so now let's see the structure of the coursework. So these are the courses. So first of all, I would like to ask Vladislav to say something about the financial computing and quantitative investments course, where he is co-teaching with me. and also to say something about the quantitative risk, the part about the market risk. So, Vladislav, can you join us now and see how do we do that? Do I need to get out of the...
I'm not completely sure if you can hear me. I cannot see myself, which is maybe not super bad, but I hope that at least someone can see me, or we don't have the video at all.
We hear you very well, and now we can see you.
Okay, here is Vladislav.
Okay, perfect. Live from my home. Sorry, like I was almost late to this presentation.
Just a second, Vladimir, please. Vladislav, sorry.
Both of them will be patient.
Samo da vidim kako se ovo...
You see, our knowledge of technology could be improved.
Kako se, ne znam. Pin, aha.
Evo ga. Okay, here we go. Okay, Vladislav, can you hear us?
Yes, can you hear me?
Okay.
Yeah, I'm relatively close to the mic, and hopefully you can hear me really well. Hello, welcome everyone, welcome future students live here from Düsseldorf, Germany. I'm really grateful to be here in this very moment, and thanks Professor Urošević, Mr. Damjanović, and everybody else for this great introduction. It's not easy to follow that, and I promise that I will be short, but not less interesting. Unfortunately, I have only one PhD in financial mathematics from Technical University of Dortmund, not so far away from where I'm currently sitting. And the reason for that is I also spent the last decade working in financial industry here in Germany, mostly focused on big clients in Frankfurt. I try to incorporate much of my knowledge that I gathered over the years into what you will know as financial computing and quantitative investments course. And there is a lot of things that me and Professor Urošević that is, how should I say, gladly sharing this course with me, trying to teach our students. So at the very first couple of lectures, Professor Urošević is teaching what actually risk are and what is the, return to risk game, sort of speaking, and try to let our students understand the very scientific gist of how we measure really good investment. Then obviously natural way of progress is teaching Markowitz mean variance portfolio optimization. That's something that is still huge in the industry, and the theory is something that won Nobel Prize, capital asset pricing model, and so on. Then I jump on a stage virtually most of the time to teach incorporating expert opinions in optimization process, something that we call Black-Liderman approach. Then I talk a little bit about stock return anomalies, investment strategies using machine learning and big data, and so on. We are really focused to bring everybody to Python speed. That means that all of our lectures are sort of given in Python, and we encourage our students to follow us along and to program and to test their skills, mostly because in the second part of my course that I share with Professor Urošević, something really interesting happens, and something that students like from all generations, and that is our quite famous market watch game, where we actually give, or I give, the real $30,000 for every group of students to invest, and then depending on their strategies and their returns after 30 or so days on the stock market, they're able to win up to 35% of their points necessary to pass the exam. Is that money real or not? There's only one way to find out, is like to join us in that game, and also to do that, you first need to be patient through our 10 lectures or so. Also, at the very end, we have conceptual CFA-like questionnaire in a form of written exam that is like kind of cherry on the top to test students' knowledge. So it's not only fun and games, but also a little bit more serious learning. When it comes to second semester, I'm teaching risk management, something that is also a big part of my academic and professional career, as some topics that I'm really passionate about, as value at risk, expected shortfall, and everything beyond expected shortfall, something that is also, as we call in financial industry, cash cow for financial consultants, because obviously a lot of banks need to get their risk in order from the governance perspective, and a lot of them still don't know how to do that. It requires a little bit of science, a little bit of financial mathematics that I'm absolutely glad to teach. Risk management is... I'm not the only one who is teaching that. I'm grateful to share that with our experts, Carsten Sprenger from University of Glasgow. I hope I'm not butchering his surname, and one and only Miodrag Janušević, and they're teaching credit risk and integrated risk. Correct me if I'm wrong. I think Professor Janušević is probably present there as well. I saw his face before my camera turned on. So I'm super excited to work with students. I also try to be in Belgrade present every April and every September, which means that a couple of lectures I'm going to give in flash, and everything else is going to be online, which also gives a little bit more students opportunity to not hurry from their daily jobs, and also gives me a little bit more opportunity to prepare, because as you can see, I'm also fresh from my daily job, unshowered and unshaven, but in a quite good shape. What else I can tell about Master of Computational Finance that was not already told, and that our students are not going to tell a little bit afterwards? Expect that the pool of talent is absolutely great. I also help a lot of students find interesting jobs at home and abroad, and facilitate this kind of knowledge movement that is happening across the board. And I'm super proud and happy to be part of this chair in this organization. If you have any further questions, I'm ready to answer them. If not, I will give this virtual microphone back to Professor Urošević, and I'm happy to hear what comes next.
And after all these years, you can just call me Branko. That's okay. By the way, that's how everybody calls me. So now we don't know how to. I would like to give the word to Carsten, but before I do, Vladislav is too modest, and he's honest too, but except maybe about that money. But anyway, he is also a writer, an accomplished writer, and a musician and some other things. But the writer, he published books that were translated among other places in Germany, and based on that, Society of Writers of Germany sponsored him for the permanent residence, and this is how he ended up in Germany. So, something else. Okay. Okay, meni treba pomoć za ovo. Ne možeš da odiš. Pa hoću sad Carsten. Carsten, can you hear us?
Yes, I can. Can you hear me?
Okay, is there anybody, can anybody come and, okay. I don't, theoretical help I don't need.
I need to go now, so
okay.
I thank you all for coming once again, and have a nice time.
Yeah, here we go. Carsten, can you hear us?
Yes, I can. Can you hear me?
Okay, yes. Please introduce yourself. Don't forget your Moscow experience.
So thanks, first of all, for this nice introduction from Vladislav and from you, Branko. I'm happy to be here today. My name is Carsten Sprenger. You absolutely correctly pronounced it. So I'm from Germany originally. And I probably one of the veterans of this program. I have been teaching even in its first incarnation at the IMQF and now in its second incarnation at the MCF. The course on credit risk, which is part of the risk management course. And it has made actually the same change from finance to more computation. It was at the beginning a pretty much theoretical course on the models of credit risk. And then later on, we have introduced more practical programming exercises, which we do in R, so that you have a little bit of a variety. Some courses use Python, some use R, and in the financial industry, you will also find both, and it's good to know both. I have been, so my current affiliation with the University of Glasgow, and I also keep working a bit at the New Economics School in Moscow, where I have been for the last 6 years, like until, say, 2 years ago. I was physically there. So, you know, also you're having a little bit of exposure to these emerging markets is interesting. And so you see the world of finance also, like how it works in not so developed markets, which is often creates problems, right? So you don't have all this perfect data. So there's data missing. There's you need to work around some solutions. Just a few words about the credit risk course. So it is from the perspective of a financial institution, say a bank, you have your trading book. And the issue is that on some of these, say you have bonds, there are some other assets that are sensitive to defaults, and they suffer from defaults. And this default risk basically is what we quantify. This is the modeling part in credit risk. But the most important basically here in the trading book is, where's their credit risk? Well, when you not deal on a formal exchange, because there's a clearing house, they will take care of it. There will be almost no defaults. But if you trade bilaterally over the counter, that's the so-called counterparty risk. Then this becomes important, and this is the credit value adjustment, the CBA and DVA, and you name it. There are many things to keep in mind. This is one thing. But the main focus of this course is nevertheless on the banking book, your loans, and maybe also bonds. So they are subject to defaults, and to quantify this default risk. And there are several models out there. One of them is the Merton model, which is basically the Black-Scholes model that Branko mentioned today, just applied to the balance sheet of a corporation, where you can actually, and that was the great observation, or the genial observation by Merton, that the equity of the company is nothing else than a call option on the underlying assets of this company. And from that, we can develop methods to get hold of the probability of default, because we can use data on equity. And that will tell us, the stock market data will tell us about the probability of default of this company. That's just one model. We see many others, but let me stop here. And I hope you get curious and want to study this and many other things in the program. Thank you.
Okay. So thank you. And how do I, can you come again? Maybe you can sit here. Okay. Okay, now maybe now that's fine, because we can, Mishko, now I would like you to tell, first of all, introduce yourself. And secondly, I would like you to say something about our course we do together in financial derivatives, short things, and also about your part of the credit, of the integrated risk.
Sure.
Okay.
Thank you, Branko. Well, my name is Miodrag Janjušević. I teach with Branko course in financial derivatives, and I teach part of the course in quantitative risk. My kind of contribution to the program is probably more in my experience in financial markets on Wall Street since, let's say, '92. So given the age, I accumulated quite a bit of experience, and I participated in the early days of derivative markets, and basically was somebody that, by the virtue of working on this problem, did some innovative stuff as well. That career went from Kidder Peabody to Chase Manhattan Bank to JP Morgan to Deutsche, couple of hedge funds and so on. You know, all of these activities, I was in the far front of designing as a head of equity derivatives research for Chase Manhattan Bank, and later on equity credit solutions for JP Morgan. There was a lot of innovation in convertible bond space. Some of the things that my predecessor mentioned in credit risk valuation, Merton models, application of Merton models, let's say, for valuing highly yield convertible bonds. Those were all real problems. People were putting money on these financial instruments and wanted to get models that correspond to reality. And when you do something like that, you basically have a chance to see the validity of your approach in real time, and also to do some improvements if necessary. So in credit, let's say, Merton model obviously is elegant and people use it, but it has kind of limitations to be something that corresponds more to high yield credit than in general credit, right? So then the group that I was leading in London came up with credit risk reversal, basically making a portfolio of equity options that behave like credit default swap. And that was quite successful, and we did introduce that to the industry, and so on. So also in market risk, one of the things that I teach is how the students is how to construct macro risk index. Macro risk index is, in a way, something that I cooked up based on some previous knowledge that was in the industry, but I extended it and generalized it. And now in a quantitative risk management class, people construct macro risk index using the implied volatility indexes that are readily available on Bloomberg, etc. So those are quite, when you think about a program that can introduce this type of cutting edge sort of approach to certain things, it's not that common, right? It's simply, it's a nice marriage of rigorous academic sort of background that Branko gives students in financial derivatives, basically leading them through mathematics of coming up with a risk-neutral framework and coming up with a probability density function that comes out of this risk-neutral framework. So once you have that and you apply it to option pricing, then comes what do you do with it? What is it good for? And then my job is to say
and Miško is doing a very, very important thing. He is actually guiding you guys with the trading game on trading options, given his experience.
Yeah, we do. Thank you. We do want students to get kind of 3 dimensions of these problems. You know, mathematical foundation is one, and understanding what is the market, what is the problem we are trying to solve. We have something that is money, and there is a time value of money. And whenever you buy something, you need to borrow money to buy it, and that costs certain things. Then you have, let's say, stocks, and you have to pay, you gain the dividends owning the stock. That's the real money too. So that's the deterministic part, right? You know how much you paid for money, you know how much dividend you're going to get. But your underlying asset is trading in the market, and you see fluctuations in prices that you cannot deterministically describe. You associate certain randomness to it and say, okay, I now see two things. I see this deterministic part and I see randomness. So that's what I need to understand and solve. And then through basically combination of stochastic calculus, some simplification in assumptions about the random processes, Wiener process and ethos process and ethos lemma, you come up with the differential equation that you know how to solve. Once you are on that firm ground, it's easy to price the option. You can do it numerically. In some cases, you do it analytically. Then we go and explain to students that it's not just black Scholes, there are exotic options, the Asian options, look back. People look at all sorts of payouts, either to limit the price of the option or to achieve certain risk profile that they need. So all of that is something that we want to put in the course. And at the end of the day, let's say yesterday, our students have kind of like trading lab. For the last month, they went to e-option platform. It's an electronic trading platform, and they did paper trading. I assigned, let's say, 3 problems for them to basically go through and record hedging and payouts daily for these 3 types of problems. And the idea here is not to make or lose money. In each outcome of their trading exercise, the main value is to come up with an understanding. Why did you make money? Why did you lose money? What contribute to it? That's the real thing. That's making you, let's say, derivatives trader. So there is also that aspect of our course that at the end completes the whole thing and gives people a real understanding about the nature of the problem they are trying to tackle.
Okay, thank you so much. I hope this was clear for at least conceptually what we are talking about. If not, it can become clear if you start to study these things. It's done in such a way that it's all in a digestible chunks. So it's very well organized, the whole thing, and the students can actually explain to what extent what I said is true. I would like to ask Ante Dodig and then Drago to prepare. Ante, are you here? Ante has fallen asleep. No?
Good evening, Branko. Good evening, everybody. Do you hear me and do you see me? I've been listening in and I could hear you up until this moment when I turned on my camera. Do you hear me?
We do in Zoom.
Thank you, Drago. Seems that in the meeting room they do not hear me.
They don't hear. So, Netrug.
Can you hear me, Branko?
Ne, nego ne čuju njega. On je na Zoomu i ne čuju ga ovi u meeting roomu. I can hear you. Can everybody else hear you? So Drago can hear you, then that's fine.
Good, then we can proceed without further delay. Thank you for inviting me, Branko. It's a great pleasure to be joining you, the rest of the colleagues, current students, prospective students. Let me start off by saying that I'm very happy to be part of this program for the past 2 years and to witness the progress and the results that we have all achieved to get together. So I think it's in order to start with compliments to everybody who's been participating. It's great to see that the program continues to evolve in the offering of the content, addressing the evolution both in economic and social environment, and expanding its footprint by number of students, profile of students, inclusion of working professionals who are augmenting their skills, and bringing in growing number of institutional partners, banks, fintechs and so forth. And I think one facet that hasn't been mentioned enough is that with inclusion of such diverse profile, we really get to learn a lot from each other through experience, through knowledge as well. My name is Ante Dodig. I'm an assistant professor at the Union University School of Computing, and I teach a course on investments. Aside from academic involvement at MCF, I'm also an assistant professor at a PhD program at University of Mostar, and I'm an active investment specialist working for international financial institutions, running investment projects globally, particularly those in the financial sector. So let me tell you a bit about the course on investments. The aim of the course is to provide a contextual understanding of what financial system looks like, given the involvement of organizations that really operate across the boundaries. We thought it was important to give an in-depth understanding of what constitutes the financial system, aside from the banking sector, which dominates in our region. So we introduce the narrative of the creation of the financial system and importance of each of the parts operating the intermediation, and then we speak in that bottom-up approach about the analysis of financial statements, of income statements, balance sheets, cash flow statements, statement of equity, to move to the second part of the course when we speak about how to really conceptualize, structure, and manage investment projects. We use a lot of the principles from the Project Management Institute, the knowledge areas, the initiatives, but also we focus a lot on what really works in practice. And that's where this course becomes a bit distinct, since we put together in-depth academic experience, technical knowledge, research, and also experience for practice. So we bring together, aside from my own experience in practice and research, a lot of the global practitioners who really can then speak from a practical point of view and introduce to you, in contrast, what you can see with your own eyes in the markets. So in that essence, we are joined by general partners of private equity funds conducting investments in Southeastern Europe. We're joined by directors from blended finance institutes who are really the leaders in promoting the energy transition that we see. That way we tackle an increasing trend of environmental governance. We also focus on social governance as well, the impact of cybersecurity from the digital transition itself. We're joined by directors of investment banks who talk about underwriting projects as well. Then, aside from that, we speak about mergers and acquisitions through boutique investment banks in the market who have conducted a lot of the landmark transactions that you would be familiar with. So in essence, the purpose of this course is then to generate knowledge on how one can conceptualize, manage investment projects. We do an in-close look at how to value investments. And then we tackle also the contemporary and the outlook of the trends in the market, such as the energy transition, the digital transition as well.
Okay, thank you very much, Ante. This was very enlightening. So can I ask now Drago to say a few words about fintech, and before that about yourself, since you obviously are in the financial industry for a long time, maybe just very briefly about what you have done, and you have done a lot, just like, you know, and then to say what you're doing now.
Thank you, Branko. I hope this camera and audio is fine. And the story about fintech in Belgrade is that about 10 years ago, I have been headhunted to help a small tech startup to develop an investment engine for automated app for personal investments. And this initiated my transitioning from hedge funds, where I've spent 20 years, into fintech. And a few years later, I challenged myself to design an integrated original fintech syllabus. And luckily, just before COVID, Queen Mary University in London let me trial this elective. And then it was followed by UCL, University College London, Warwick Business School. And I ended up doing this and testing this syllabus by teaching at several places simultaneously each year. And it was a very steep learning curve. And that is why students in Belgrade this autumn will be my 15th cohort of fintech students. Some 500 students, mostly international students from over 20 countries, have taken my elective, and it became almost like my school of fintech. And fintech is slightly different elective to other things that computational finance was about. It is going beyond finance and programming, and it is not about specific trading skills or quantitative finance. And some people would say that it is almost like MBA in financial services, because fintech elective is going to sweep through a universe of all apps that are running on your mobile phone or some internet systems that do and deliver retail financial services. And because it is not B2B institutional quantitative finance, it is something that is direct to customer or P2P finance, it is very different. And that is why it has to integrate concepts of digital identity, citizens, people, and think very hard about personalizing investment solutions for every single individual. Also, to remain regulated, and it is heavily entrepreneurial. It is dealing with startups, and group projects are effectively ideas to not just analyze fintech startups, but also to try to build one at the end as a group project.
Okay,
and
I think we need to stop now because we are running out of time a little bit.
That's fine. Okay. Thank you, Branko.
Thank you. So now I would like to find my slides, if I can. Okay, here we go. I don't want to go through too many things because now we have seen a lot of things, and if only I knew how to restart. Can you help me start the presentation so that people can see? Yeah. And to start, okay, that's. Okay, thank you. So basically, there were some other courses. Very briefly, I can just say there is a fantastic course on statistics, which is taught by Milan Nedeljković, who is probably one of the best statisticians and econometricians in Serbia at present. And he has his own company that applies all this stuff in machine learning applications in businesses. And the other courses that I wanted to mention is the machine learning and the fixed income. And this is taught by Nikola. I cannot use his last name, but he's working in the largest English bank as the head of the quantitative investment strategies. He was my student and my previous master. And he is basically fantastic, very busy guy. Very top level guy, and you get to learn, and he's applying both of these things that he's teaching, he's applying in his investment practice. He works with the very rich people, this private banking. Okay, so we do a lot of collaborations, which was mentioned. I would just say that apart from our companies that collaborate with us who are from Serbia, which are plenty, including our largest banks, as well as our fintechs and so on. We have also an important cooperation with the Privredna Banka Zagreb, which for the second year was sending us the participants and very good participants. Also, for the first year with Zagrebačka banka, we had a wonderful cooperation with NIS, with Fidelity Investment Services, and something I'm very proud of, Ernst & Young Prague. They're sending their people for the training, so basically every year they send them for individual courses, and they're also teaching in our program as guest lecturers. And that's the best group in Europe, apart from London, in AY, in risk management. And AVP workshop, which is friends of ours, and the center are teaching a module on blockchain and decentralized finance. So basically, I don't want to take any more of your time because I would like you to experience before everybody leaves from us droning a lot on and on. I want you to experience our wonderful participants. And so just mention that those who want to prepare for the CFA, FRM, or Premier exams, for those who know what it means, none of my students ever failed one of those. Okay? So, and many of them took them. Okay, so that's first. Also, recently, we were approached by these guys. I didn't know exactly what it was, but it turns out this was a certificate created by Paul Wilmot, a famous mathematician from Oxford. Exists for 20 years. And apparently, it's a very big deal. Well, the great thing is our students get for free all these resources they have for 1 year, plus all the networking opportunities. So if you look for a job, this is the way to connect. I mean, among many other ways. So this is great. And they asked us to join. So we were the first computational finance program they asked to join. Okay, this is some nice words. And just to say that we are currently accepting applications for the program. And we already got some very interesting applications from several countries, and including Serbia, of course. We got some very good students from RAF. We got some very good students from the Faculty of Economics. We got some interesting other students. A student from China, a student from Ghana, and some bunch of others. So you can find out more about us. Of course, you can also go talk to Dragana if you are at RAF, and Dragana can tell you how to catch me. She has my phone number. I don't mind giving Dragana to give the phone number for people interested in the program, so we can get together, talk, and we can discuss whatever you want to discuss. Okay, so that's roughly speaking. And now, before we do anything else, I would like to invite people. We start with, is Nikola Krivačević here? Okay, Sofia Milosavljević. You're here. Okay, please. So we can all get up and leave. And so we have, maybe we can bring another chair. We can bring another chair. There are others. Okay, so Sofia, Vasilije, Nikola. Okay, and Katarina Oško. Katarina? Okay. And let's see, I think we have another space here. So, yeah, because, please, Katarina. And do we have, we can have, okay, maybe that's, and you can sit. Okay, fine. Okay, perfect. So, I would like you to just start and go one by one by introducing yourself, starting with girls, and then the guys. Okay? So, Katarina, can you please do the honors?
Yes, thank you. I'm Katarina, and I'm from Croatia. I currently live in Zagreb, and I work in Market and Financial Risk Office of Privredna Banka Zagreb. So, this is shortly about me. Before this program, I went to the Faculty of Science and Mathematics in Zagreb, and I got my master in the Business and Financial Mathematics. Since I had to work through this whole program, it was sometimes not easy to balance between work obligations and all the courses and studying and everything that we had to do for the program. But on the other hand, I think that the fact that I was working gave me opportunity to take the most of the program and the stuff that we learn here. And the timing was really perfect for me. I will give you just one example for you. You heard that here we learn a lot about options, and yes, we did a lot stuff about options. And roughly at the same time, our bank got a request that we should include interest rate option into interest rate risk measurement. So it was a big request, and even though we didn't learn here so much about interest rate option, we were focusing on the other types of option. But I was constantly thinking during the classes how I can apply this on my example, and it really helped. And also the teachers here and everybody, I could ask everything and clarify all my doubts, and I can tell you it really helped to do this on the work and implement everything. But not everything that we did here was something that I was familiar with from before. Let's say trading, investment strategies, and things like this, I didn't get in touch before. And it was quite challenging. Not so much the theoretical part, since it's basically mathematics, but the practical part, as professors already told you, there are practical things and the projects when you really get to trade. And it was very interesting, really intense, because you get this money, fake or not, and you have to make much of it. So you have to earn something, learn something, do some strategies and something like this, and it really makes your hands sweat. I learned that trading is not for me, but nevertheless it's fun. It's really interesting.
Well, thank you so much, Katarina, and thank you for coming from Zagreb. Now, let's hear you.
Hello, everyone. My name is Sofia Milosavljević. I've been working for a past year and a half at the Raiffeisen Bank and the Integrated Risk Unit, mainly doing some stress tests and simulations, because we have our internal models for ratings and then simulating ratings of different clients under different macroeconomic circumstances and assessing the adequacy of capital that bank has. So I think that Emilia said what all of us think, and that's that the most important thing here is people. I have to say that because for me it was amazing to hear from somebody that actually has experience in some stuff that seemed really distant to me, like, for example, financial derivatives and trading with financial derivatives. Also, getting to know the Python was really practical for me, because in banks a lot of things are doing in Excel in traditional ways. So when I came there, the first thing I asked was if I can use Python, and they were like, okay, you can do it. None of us do it, but you can do it. And I think that I really improved efficiency a lot. And I think that I actually really like all those tasks. It takes a lot of time to complete all those tasks, but actually you get the feeling that your theoretical knowledge can be combined with something practical, and after you're done with all of those tasks, you actually see the real result. So all those games that they mentioned that we had, like the trading game we had with Professor Radak, and the game we had trading in financial derivatives with Professor Janušević, they were a great opportunity to see how things work and actually to have a lot of fun. So yeah, it took a lot of time, but I think that it was actually a lot of fun to do. And also like doing in teams where you have people from different educational background was amazing, so that you can help each other and share all the knowledge that you have acquired before. And I can think of anything else I would emphasize, but...
Thank you, Sofia. Sofia is an economist. She finished the LSE program. Okay, Nikola Kovačević, our valedictorian from the first generation.
Yeah, hi everyone. Thanks for having me here. It's a great honor to be here and to see friendly faces and some of them who I know, and to see professors back again. So yeah, I think I'm gonna try to have more kind of maybe pragmatic approach to say my reasons why I actually chosen this program and what and how actually it benefited me. So, but first of all, I agree with everyone else. I mean, one of the key kind of selling points here was actually that you can actually do your primary job and do this on a side as well. So you can kind of manage that, not easily, but you can manage that. You had pregnant lady here, she managed it, so all of us can do it. Come on. And also, I mean, professors are really nice, because I think I was one of the first guys who actually pinged directly Branko, or when I was asking about the former program MQF, and also Drago I pinged on LinkedIn even before I met him as a professor on this program, for asking some kind of career stuff advices. So they're really approachable and you can learn a lot from them. But for my reasons, being here, I was working a couple of years in one of the biggest fintech companies called FIS, and there is a former coworker of mine here in the audience as well, so it's really nice. And we were kind of working for kind of building kind of the trading platform that hedge funds, investment banks were using, basically to structure their whole operations on it. And I was working with a bunch of people, from traders, analysts, risk managers from London, New York, Singapore, South Africa, Mexico, and my background is an engineer. So as an engineer, from technical perspective, I could tackle anything, not anything, but I mean, most of the stuff I can manage. And via conversation, collaboration with all of those people, I figured out that I was lacking maybe some more formal knowledge in the finance and economy, even though I was learning on my own. So that's how I actually ended up here, being on this master's program. And how it benefited me, well, for example, today I'm working at one of the oldest crypto exchanges called Bitstamp. I can say today, since it's public, from today, it's kind of today it was acquired, and now it's Robinhood, not Bitstamp. But yeah, I mean, it's really fun because, for example, I was working on one of the projects for over a year, where actually we kind of implemented a whole new solution for spread trading on spread here, compared to having regular fees as a user when you trade. So that involved working with one phenomenal guy who had over a decade on working in investment banking in JPM and Goldman. So if I look at this now, I'm the only guy alongside him who can actually understand all of the mathematics and financial stuff in the company, so I can also backcheck him and implement all what's needed. We were using machine learning kind of to optimize short-term volatility spread model for that system. We were kind of doing analysis on the liquidity and other stuff, how to actually determine which assets to list and delist. And today I'm also in that company working, which is from the engineer's perspective and from this financial perspective, very interesting. So we are building derivatives platform from scratch. So in that sense, from implementation of various models, calculations, to technology solutions, what Drago mentioned, so fintech basically combines and gives you basically synergy of those worlds, technology and finance. So yeah, okay. I think merging couple of areas today is really good for your career, if you can do
Okay,
that.
thank you very much. So now let's hear from Nicola here. Yeah, okay.
Hi, everyone.
Try to be short.
Yeah, I will be short.
This guy I can tell to shut up if he's...
Yeah, I am Nikola Pantic. By education, I am economist, and I'm currently working in Unicredit Bank as a money market, derivative, and bonds trader. And Professor mentioned before that most of the trades done by algorithms. Nevertheless, I belong to this small group that do this manually, and I am surrounded with really smart people. And because I'm economist, it was really difficult to me to translate my way of thinking to this computational, but it was really useful right now, and I will put weights of three the most important things to me. The first one is networking. I met really quality and really diverse people, friendship of lifetime. The second one is advisory board that no one mentioned. It's really important to have access to real information from real world. And the third one is to trust the process. Master is really competitive, is really challenging, but you just need to go with the flow and trust the professor. That's all from my side.
Thank you. And last but not least, please.
Hi everyone, I have to amend to Nicola's words. I have to say that Nicola passed 2 levels of CFA, which is worth mentioning, so probably partially thanks to this program. My name is Vasilije. I have graduated from the Faculty of Economics. Currently I'm working as a consultant at EY at Belgrade here at Risk Management Department. I have to say that this master helped me a lot and helped me gain my current job, and at work we are literally applying, I have to say, 100% of things we learned. First is teamwork, the second is meeting the deadlines. Of course at masters it was homework, at work is a project. At masters it was Professor Branko or some other professor, at work is a client. And you have to provide high quality work. And I advise everyone to try. I don't regret, of course. I'm very happy and I'm very grateful for the opportunity. That's all.
Thank you. And that's it. Join us. And then we are going to turn off, after this we are going to turn off yeah. Okay. No, that's okay. I can still, no, that's fine. So, so please, Angela, of course, why don't you start? You can tell your experience.
Hi, everyone. So, my background is computer science, which in our generation is not a lot of people. So I guess my experience will be valuable to those of you who are engineers or computer scientists. So I would like to mention first the bootcamp. Even though if you have some knowledge in programming, it's a great refresher, and shall you decide to join us, this is a must in my opinion, because you will meet your group mates and just kind of like a sanity check to all stuff you learned from before and get some basic concepts in finance. For my side, I didn't know a lot of finance. I finished computer science in Hong Kong and afterwards worked in a hedge fund as a software developer. There I kind of realized that I really like the idea of modeling financial derivatives, but I just don't have enough knowledge to really understand, for example, Black-Scholes. So I hope to get some formal education, and then I learned about MCF. So after bootcamp and just getting equipped with those basics in both, you get to the first semester. And as everyone mentioned, it's a lot of coursework, but it's manageable. Just, trust the process, and with studying and something like that, you will be able to understand everything. In my opinion, it was totally worth it, and I'm very happy to have engaged in this.
Okay, thank you very much. And by the way, we are working on kind of streamlining a little bit just to kind of make it slightly even more manageable, okay? Anyway, so please now use,
Hi everyone, my name is Miloš. I'm also a software engineer by education, but unlike I would say most other participants, I didn't work or still don't work in a finance related field. So my motivation for joining the program was just learning more about the economy and the finance and how the markets work and how the world works. And I think it really gave me a completely different perspective. I would say most what other professors and other students also said all resonates completely with me. I completely agree and support all the benefits of the program, the meeting the new people, learning stuff. It can be challenging. For me personally, I was at a stage where I wasn't working, so I was able to dedicate maybe more time than the average student, and I think I really gained a lot more from it myself. But everybody managed to shuffle between their work and the master program, and I would say everybody gained valuable experience from it as well.
By the way, he worked in Google for a number of years and he graduated from RAF. So, okay, now please
Hello, my name is Nenad Glavčić and I am for last 15 years in oil and gas industry. It's multinational company NIS. I'm focusing in field of internal audit and fraud department, and I decided to study computational finance to see how math and statistics and programming languages can improve my work. Today I can say that I learned Python and R, and how math and statistics can make a big difference now and before. Before our audit tests on the sample data took up to 8 hours, and now after implementing Python and we do all same tests in all population of data for just 18 seconds. So we are now much faster and much precise in assessing internal control effectiveness. Also, we are start using big data visualization and successfully applied some statistical models like Benford law to identify some risk and indicators that are useful for us. So in practice, after first semester, we are actually save millions for our company. We use Benford, we applied Markovich portfolio optimization model that won a Nobel Prize. We applied in practice. So for me, it's about turning complex math and statistic theories into practical solution, in short. Yes.
Actually, I was extremely proud when I was at Nice at some event, and actually at some society of auditors, and when he was presenting and when he mentioned that they saved a lot of money using what they learned, applying, I mean, I was very satisfied. What can I say? Now, last but not least, Ognjen, please say something about yourself.
Thank you. My name is Ognjen Zakic, and I graduated from University of Belgrade International Program, London School of Economics, and I'm currently a student of Master in Computational Finance. I would like to emphasize for me 3 things that are most important about this master. First thing is flexibility. So you should be aware that if you're working, you will still manage to listen to lectures and to overcome like the burdens of projects and homeworks that are from week to week. And in my case, I did not work, but I did internship for 3 months, and after that, in the same time, I did for 4 months a case study. So, and in those circumstances, I was not sure if I could really like manage everything. Of course, it was not easy, but at the end, with the help of colleagues and of professors, I actually overcome that burden. And the second thing is that this master is actually very interesting in a way that it's not like usual education where you have books and you read and at the end you have an exam. It is more interesting in a way that you have projects, you have homework, in a way it is more practical. And just one example, I'm currently not working, but I actually managed to use this knowledge that I gained from this master when I was doing some regressions for my case study. These were like the two things that I would like emphasize that for me are the most important.
Well, thank you. And I would like to congratulate all the speakers. They were really wonderful. Okay, now. I have to say, listening to all of them, there were people from all 4 generations that we had so far. This year will be the 5th in December. Sometimes I have my doubts. I get very tired. You know, you think the students get tired? Well, I'm an old man, so I get tired. But then when I see this, then I say, okay, well, I can manage for another 10 years. Now we are going to actually hear, please now turn off the taping.